You don't have a podcast, mic and like headphones? What?
I don't. This is only my second podcast, and one was on high school football. So there you go. Right.
I didn't know you were a high school football expert. Now I do.
Well, I was a high school football player, and my high school has a podcast. So I
You like to
participate.
star quarterback? Give me something. Talk to me.
Wide receiver, wide receiver.
Okay.
So,
They run the ball the whole time back then?
exactly. 3 yards on a cloud of dust.
Welcome to Teague Talks. I'm your host, Teague Hunter. Today we're sitting down with Nolan Hecht, Senior Managing Director and Head of Real Estate for Certares. Aside from Nolan's amateur boxing career, he's one of the most active players in the hotel space today. We're going to find out how he started Certares' real estate fund and why he's so bullish on our industry. Thanks for joining. Nolan, thanks for joining me, my friend. I'm glad we're doing this today.
Thanks for having me, Teague. It's great to be on. I've been a ardent follower since well, I guess you started this back in early days of COVID, and I've been a subscriber. I love listening to the personal interest stories and getting everyone's take on the hotel industry. So I'm humbled and honored to be here today. Thanks.
You're kind. I'm glad you watch. I'm still shocked that anybody pays attention. I'm not really sure.
This is great stuff, Teague.
People seem to really like it. People seem to really. So we're going to keep doing it as long as people want to hear from people like you and me. We're going to keep doing it. All right. So I'm glad you're here. The reason you're here, of course, we got to find out who Nolan Hecht is. But the reason you're here is because you guys, Certares, you guys are really active today. Arguably, I mean, there aren't a ton of transactions happening. You guys are really active. You bought two recently, San Diego, Boston. You can talk about those later. Those are really good. So you guys are active and aggressive. So I want to know why you're active, why you're aggressive, how you're underwriting, how you're getting deals done, because I think that's very important to what's happening today. But before we do that, I got to know, who's Nolan Hecht? How'd you end up in this joyous hotel business that we call life?
Yeah, sure. So I'll give you a little background, and my story is a little different than some of your guests here, but I'm a Midwest boy. I was born and raised in Cleveland, Ohio, and growing up, Teague, I had the ambition in every kid from my area had, and I'll tell you what that is. I wanted to go to Ohio State, play football, and then be drafted by the Cleveland Browns. That is the dream of every male kid growing up in Ohio. Unfortunately, I showed up for freshman football and I was 5'3", 115 pounds. So I had to have a little reality check that, my DNA probably wasn't the NFL. So I did get, more serious about my studies. But as a teenager, it's kind of like, what do you want to do? Like, what career path? And a lot of people just have no idea. Growing up, we traveled a good amount. And traveling in the 80s was different than traveling now. This was, my father, loading up the station wagon and driving to Toronto, which was, 5 hours from Cleveland. But early on, I got a love for hotels. And the exchange rate was good back in those days. So I remember staying at the Grand Dame Hotel in Toronto, which was the original Four Seasons. And I remember sitting there saying, wow, this is a great business, and watching the GM shaking hands with people and interacting and saying, wow, this is something, a career path I may want to do. And my dad had gone to law school at Cornell. So he was familiar with the hotel school program there. So in high school, and I'm dating myself a little bit, Teague, but you'll remember this. I worked for the Stouffer's Hotel on the Square in Cleveland. And Stouffer's, most people know it as, the frozen foods, macaroni and cheese company. But when I was growing up in Cleveland in the 80s and 90s, Stouffer's owned a series of hotels, 40 hotels and resorts. And Nestle owned Stouffer's, and it was based in Cleveland. So I worked at the local hotel, and got an appreciation for the hotel industry. And they had me doing odd jobs. I was, cleaning rooms, cleaning toilets, doing, front desk, wherever they could put like kind of the young intern.
Of course.
I was kind of the gopher. And so my wife doesn't believe this. She's like, there's no way you made a bed or cleaned the bathroom. But I started very humble roots in the hotel industry, Teague. And so that was my introduction. I worked at
Those are my favorite times. I mean, again, I was the bellman, the bellhop, which is the same thing. You do every job, front desk to cleaning rooms, doing everything, which is how we all get started in this business. Those are the stories I love the best. And my football career ended in the 8th grade when I got knocked out. And I was like playing running back. I shouldn't have been. It's like, peace. I'm going to go try a non-contact sport.
There you go. So I kind of parlayed that love for hotels and that work experience, and somehow the hotel school at Cornell accepted me. I'm not really quite sure how. My grades were okay, but I was passionate about the business. And back then, the school was very focused on finding students who had work experience in hotels. And so that started my journey. I went to the hotel school. And I learned pretty early on, Teague, I thought I was going to be a general manager, right? Like, I'm going to work at the Grand Wailea in Hawaii and be the general manager, right? Yes. That's the dream. I realized that's a very long path. It's a very hard path. The pay isn't great and the hours are terrible. So somewhere along the way, I kind of pivoted from hotel operations to a course track of hotel real estate and finance. And so when I graduated the hotel school in 97, I went to work for a firm that no longer exists today. But back when I joined, there was 30,000 employees, and that's Arthur Andersen, which was one of the big 5 accounting firms. You'll get a kick out of this. My manager was broker Jeff Davis now at Eastville. And, we all know Jeff. He's a character. So I certainly learned how to get into every bar and club in New York City with his contacts. But that was a great start to my career consulting because I was on the road probably 40 weeks a year. I was seeing different hotel projects, and I was meeting a ton of people. So, everyone thinks the road to private equity is I'll do 3 years at an investment bank and then, transfer to, private equity real estate. My path was far different than that. And I think I'm better for it. So I did 3 years at Andersen. Andersen collapsed in, I think, 2001 was the Enron scandal. I think it finally went down in 22. So I left right before that, Teague. I did not cause the collapse of a major U.S. accounting firm. And I actually joined your side of the business. I was on the dark side of the business. People forget that.
Oh, it's right.
For 8 years, I was on the brokerage side of the business. And I was at Hotel Partners, which then became Insignia and became, CBRE. And it was great. It was a great place to learn the transaction business. It was a great place to increase my network. And I saw deals from the sales side, which again, now I'm on the buy side, but I eventually sell all my assets. So it kind of, put the whole career together. But I eventually knew, Teague, that I wanted to get back on the equity side of the business. So I took a job with AIG, the large insurance group, and I ran their hotel book, which we had some really neat assets. We had the big Marriott San Juan in Condado. We had the Stowe Mountain Lodge up in Vermont. And that was a good, 3 years. Until the GFC hit, the global financial crisis, and basically the US government took over AIG. Nothing related to real estate, but kind of the second firm I was at that was like going under, right? Luck of the draw, right? And the writing was on the wall. They were going to sell everything non-core, and real estate, they were in the insurance business, so real estate was not core. And that brought me to Square Mile. And how I found Square Mile was, believe it or not, a publication, Real Estate Alert, which we all read, announced that Square Mile was buying a pool of 52 hotel loans called the Silverton Pool from the FDIC.
Oh, yeah.
And I was looking into Square Mile and I was like, they don't have any hotel people over there. They don't know what they're buying. And so my friend Peter Willis, who you know I'm sure well, who was at Innkeepers or Chatham back then, introduced me to the principles of Square Mile. And so I joined in 2009. And from 2009 to like 2013, we bought 100 hotel loans. So our business was buying hotel loans, either foreclosing and taking back the assets, accretively restructuring the assets, or some of them just paid off at par. And so we ended up taking back like 30 hotels. I think you might have sold 10 of them for me, Teague. And I think that's where I, kind of first got to know you and your firm, was back, through the GFC days. And so I was at Square Mile for 12 years, a hell of a run. We built out an equity business and bought hotels. We built out a hotel lending business. We were one of the first, transitional hotel lenders, debt funds, as you would call them today. And that was a great run. And I thought I'd probably finish my career there. And then COVID hit, right? And, we had never experienced anything like COVID, right? Hotel occupancy is going from 80% to 0% literally overnight, right? And I was in the process of closing hotels. At hotel school, they teach you how to open a hotel. They don't teach you how to close a hotel. So we were literally making up, how to do this. And it was painful. We were laying off employees. People don't realize how painful that period was. And we're only talking about 4 or 5 years ago, right? I mean, it was not long ago. And so, during that period, the one thing I've realized in my career in the hotel industry, Teague, is the greatest wealth creation has always occurred after a crisis, right? So whether it was the RTC in the early 90s when people were buying, hotel debt, 10 cents on the dollar, whether it was the GFC, whether it was 9/11, the one thing I knew was that COVID would create an opportunity, right? And so I always wanted to do something, build a business from scratch on my own, right? That was, that's what I wanted to do. I wanted to hire a team with my DNA. I wanted to take all my learnings in the hotel industry and build something. And you only get one career, right? And I was 46 years old and I said, now is the time. But I was nervous. I was hemming and hawing. Should I do this? Should I not do this? I got a family. I have kids going to college. Like, what am I doing, Teague, right? And I give a lot of credit to my wife. My better half said, now is your time. You've wanted this forever. And she pushed me, said, go do it. And so I was introduced to the folks at Certares. And Certares was a firm founded by Greg O'Hara and Colin Farmer, and Henry Briance, solely focused, a private equity firm, on the travel and hotel distribution industry and business. And they always had a plan to own hotels, right? If you own the distribution and all these travel companies on one side of the business, and if you could buy hotels on the other side of the business, you could leverage all that know-how, that distribution, to create a little alpha. So I ended up jumping ship in COVID. It was risky. And I joined Certares in November of 2020, right? Crazy.
Good, great decision though. Listen, from one entrepreneur to another, I love the risk that you took, right? I mean, go bet on yourself. I always suggest bet on yourself. And it's sometimes especially today, it's hard to really truly start something from scratch. So it's nice to partner with.
And I'll tell you the day that I knew I was right Teague,
Sure.
I'll tell you, November 17th, 2020. I remember the date because I was worried about the decision, right? Could we raise money? Could we buy hotels? Were we going to be successful? And Bill Gates, brilliant software man, brilliant philanthropist, generous, went on CNBC and he made the famous remarks that forever business travel in the US would never return past 50%. Right? Do you remember that?
Yes. Oh, yeah.
And I said, this is a massive overreaction. And where there's overreaction, there's value. And I think Bill might have been promoting Microsoft Teams. I don't know. But I think where he missed it was the spirit of the domestic traveler. People want to be in front of people, whether it's business travel, whether it's leisure travel. People want to get out. They want to experience the great cities we have in the US. They want to move around. We see it in our cruise business. We see it in rental cars, airplane, and we're seeing it at hotels. And I don't think it's slowing down.
So I'm guessing, listen, this is what I love. And I want to keep talking about the future and what's happening. But you guys, again, you're in this Certares. I mean, you've bought 13 assets since the beginning, since you founded, let's call it 2021. Yes. When you really got started. That's arguably more than a lot of people, if not anybody, has purchased in that time frame. I mean, everybody bought a bunch of stuff in 21, second half of 21 and in 22, but you're still buying today.
I'm nervous.
You're as optimistic as anybody.
I'm the only one buying, I joke, Sean Hare at Trinity Investments, they've been buying. I feel better now. Host has bought a couple recently. Our friends at Blackstone bought the W in Lauderdale. So I'm not totally alone on my thesis, but how we started the business, we raised a fund, and our first fund was $284 million. And we bought, 12 hotels in that fund. And our thesis coming out of COVID was that, and we weren't alone on this thesis, was that the leisure markets would recover first, right? 70 and sunny. And so, when you look at where we bought in Miami, our big hotel, the East. We bought in Tampa. We bought in San Diego, Ocean City, Maryland, Cape Cod. So we have a lot of leisure and coastal presence in Fund One. And that thesis has, proven to be very, on point because, leisure travel is probably somewhere, 115% of where it was in 2019. And while there's been some softness, the softness really hasn't been at the, upscale and above categories. You're seeing more softness, I think, across the industry, at the more moderate pricing as, consumers do have some, impact from inflation. But, our properties are performing well, Teague, and we have a strong thesis. I'll tell you where we believe today, because, we're out there buying and a lot of folks are still on the sidelines, right? And we have a strong belief. The hotel industry has always started for me at supply and demand, right? You can talk about 1,000 different things, but, demand is as strong as it's been, right? And it's different demand, right? It's certainly leisure. Group has come back really strong. Convention is starting to come back strong. And business, it's hard to say where business is, right? Because if you go to my hotel in Miami and go to the pool, there's a lot of guys sitting there and gals with their fake background screens on their iPads, or computers doing business. So I don't know if they're a business traveler or a leisure traveler, but what we've noticed is it used to be the business traveler checked in Monday and checked out Thursday. That pattern has totally changed because of workplace flexibility. So we have people checking in Wednesday, staying through the weekend. So, it's part business, part leisure. And I think that's going to continue. The average probably day work in the office, is probably 3.5 days now, when you look broadly across. And I think, that flexibility has really, been pushing the demand side. On the supply side, nothing is really getting built. Honestly, there's pockets where there's building, but I think it's going to be under 1% overall for the next 36 months, maybe 48 months. Construction financing is really hard and the cost of construction, is still up significantly to pre-COVID levels. So, new construction, doesn't really pencil unless there's parking income or, condo sales or some other kind of, income. And so supply demand environment is fantastic. And then where we see the opportunity, which is, kind of the catalyst and how we bought San Diego and how we bought Boston, is capital market side of the business. There is stress in the capital market side, right? Meaning, either debt is coming due, the debt is too expensive for people to refinance out, and lenders have had these loans on their books for way too long. So they are, I wouldn't say they're being aggressive, but they're being more, pushy for sellers to move good assets, right? And the two assets we have bought, recently, both had stress somewhere in the capital stack, right? And, loan coming due, debt that needed to be paid down. And so, we're taking advantage of the opportunity. I think John Gray, who I obviously admire, we all admire him, the head of Blackstone, he says, don't wait for the all clear, right? If you wait for the all clear, you're too late, right? And so we think we are buying assets at historically low basis right now in markets like San Diego and Boston that we'd never get in, right? I can go my whole career without buying a hotel in Boston. Nothing trades. It's institutionally held. To build a new hotel would be $700 a key. And so we're jumping on these opportunities. We're not shy. I've been, one of the people with probably more optimism. I think people are waiting for like debt to get back to, 3-4%. That's not going to happen, right? Hotel debt over, probably a 40-year period is somewhere should be around 6.5%, right? And so, if it comes back to that level and you get positive leverage, then I think you'll see, certainly more trades, occurring.
I agree with everything that you're saying. It's spot on. Tell me though, give me some detail on how you're getting your deals done. And what I mean by that is you just said positive leverage. The deals you just did are negative leverage. So part of that is you just have conviction. But tell me how you're getting your deals done and why.
Yeah, I wouldn't say that, Teague. Boston we bought at almost a 9 cap. Yeah. Now it needs to be renovated, right? So we're going to renovate from almost a 9 cap down to a 7.5 cap. So we're going to have essentially 2 years of positive leverage till we to do the renovation. We borrowed a 65% loan from Blackstone, sub 400. And so that's where, debt is pricing for good sponsors, good quality assets with a real business plan. San Diego, you can debate whether it's negative or positive leverage. I mean, we own the Courtyard in downtown San Diego, 245 rooms. We just bought the Curio Carte, which is 246 rooms. And when you combine them and have some operational efficiencies between the two assets, it's really basically neutral leverage. But again, we're buying an asset there and, we didn't release the price, but it's sub 400 a key. In a market like San Diego, everything is traded well above that. We are 25% below where the hotel was delivered at in 19. And if you had to rebuild it to now, we're probably 40%, 45% below, replacement costs. So, again, we think we're buying some really unique opportunities here. But the assets we're buying aren't, kind of zero cash flow deals. They were just delivered, Teague, between 19 and 21. So they have construction financing coming due. They haven't fully, properly ramped. And, because of that, we're taking advantage of the opportunity.
Yeah, it's funny you say that. So I'm impressed that you're buying the below replacement cost and at some yield. Yes. So all the assets we're selling right now are below replacement cost. And my generic statements are that, all real estate is 20% off of its peaks, if not 50%, right? There, just gave an example, 45. So did you want to buy a half off? But our half off are at, 4 caps. not
Sure.
at 8 caps.
Right.
So somebody's got to, there's a little bit of a risk the play that somebody's got to make there, that it's going to come back, that they have a business model that they can execute on. So that's most of what we're doing, but we're starting to see those slip because the lenders are like, no, we need more leverage. We need more cash flow to support this. So those really good deals are all cash, by the way.
Right. Yeah. We've been surprised on the 2 deals we bought this year, Teague. We've had, 10 lender term sheets. Hotel debt's out there. It's just more expensive than you'd like. Right. And so folks have to go through a little bit of a readjustment of, kind of their underwriting, and, maybe, the old, underwrite to a 22 or a 20, is a solid 18 or 17, which you would take all day in a market like Boston or San Diego.
All day. All right. So what's next? Keep me going. What's your?
So look, we're not stopping. We're not slowing down. We have, major conviction that we are in. People like to talk about what inning we are in. I don't. We're early days, in my opinion. In the GFC, we went from 2010 to basically 2019. It was almost like 9.5 years of expansion. Supply demand, I think, is going to stay favorable. We haven't even really gotten international travel back. And I think there's a lot of pent up international travel, right? China basically didn't travel for, 4 years. It's, people like to say, well, the political climate could, we already have 2 wars going on overseas, right? It can't get, theoretically, well, hopefully not worse, right? And so, what I'm seeing is a resilient domestic hotel business, and I'm really starting to see some strength in the urban markets, right? The traditional urban markets, meaning New York, Boston, DC on the Eastern Seaboard coming back, right? And so I think some of our buying might be in some of those markets that have they didn't recover as quick out of COVID. But you're seeing it now, right? New York, where I sit, has 60 million visitors. We're back to 60 million visitors with basically no international visitation. And, supply with all the migrant housing is essentially flat to down. And so, I think you're going to see some really good opportunities. I'm not as concerned on the revenue side of our business. I think, where I think the risk or the more uphill challenge is on the expense side. In a lot of these markets, you have big labor contracts coming up in the next 24 months and how that plays out. But look, I am optimistic on the hotel industry.
So I love your optimism. I mean, you're very bullish on this space. Do you think others get there? When do you think others catch you?
Yeah, I think it takes a rate cut or two. I think there's a lot of money on the sidelines. I think people are going to regret not having, jumped on some assets in the first half of this year. People may say I'm a little early, but I'd rather be early than late. And I think, in the markets we're buying, I don't think we're early, but I think you're going to see certainly into the first half of next year. I think you'll get a rate cut in the fall at some point. And if you get a second one, then I think you really get folks off the sidelines. But there's a lot of money that has been raised in private equity for real estate, right? And not everybody can buy data centers, right? That's like the or last mile Amazon distribution centers, right? There's only so much of that you can buy. You don't want to buy office. I mean, because I can't figure out where the bottom of that market is. Retail is scary a little bit, right? Unless you have like the top end, malls with, great tenants, and, apartments, there's no yield, right? And industrial, there's really no yield. So all of a sudden, you remember on the food group, hotels used to be like the worst, right? We were like the last resort, right? I think we're we're moved up. We're at least on the food chart. We may be 3 or 4 now, right? And look, when I talk to investors, they're getting it, right? They're going around the country trying to get hotel rooms, and they're expensive, right? Try and get a hotel room, in Boston this week, and there are no rooms. I mean, there really are no rooms. And so, yeah, we are bullish. We see it throughout we're bullish on travel just in general. And, obviously that is the theme of our firm. But all the data is supporting that now. right? The cruise data is fantastic. The airlines, they have some issues on the profitability side, but I haven't been on a vacant plane recently, and so people are moving around.
And maybe just this week, like tip of spear, you're starting to see the stock market change. The tech companies are actually down and the real estate companies are up. So is that the beginning of the sign? Those are overvalued. Yeah. Real estate's undervalued. Let's go to some tangible assets.
Right. And so, we've gotten ahead and we've been buying while the REITs, other than Host, and Sunstone made kind of an exchange deal in San Antonio, but the REITs really haven't been buying.
Right.
And so, we're getting ahead of it. I think we will start selling some assets, where we've created value in Fund 1 into this recovering market next year. So, we bought a lot of assets in 21, 22. The business plan's complete. They've ramped. Some of them we are refinancing, returning investor capital. So I think we'll be buying and selling. I think we're going to continue to be active. I think, one of the things I didn't mention, it's like, how did we get to 13 hotels, 3,000 rooms in 4 years, right? And one of the things, I think I spent the most time, more than like, where are we going to buy? What are we going to buy? I really put a lot of thought into who is my team going to be. And, that's where I'm hyper focused. And I think we've won deals because people, they like us, they gravitate to us. And, so I spent a lot of time on team building and who our partners are. So most of our deals have partners, they have operating partners. And, we've done 5 deals with HHM, Nav and Sean and the team down there. And, they think like they're managers, but they think like owners, right? And so great relationship there. Our largest hotel is the East in Miami. We own that in a 70-30 joint venture with Trinity Investments. Obviously, Sean and Greg have been, one of the larger buyers of hotels. And this is the second deal I've done with Sean. We did previously the Ritz-Carlton in Kapalua, back at Square Mile. When I bought both Kapalua and the East, everybody hated the deal. They thought I was crazy. They're going to turn out to be our 2 best deals. But that's this industry comes down to relationships, right, Teague? So how we interface with the brokerage community, the banks is very important.
Yeah, and again, I would say life's too short. Surround yourself by good people. And you'll do great things. Nolan, this is fantastic. You're a good friend. I appreciate it as always. This is great. I'm glad you're doing all the great stuff. We're going to keep sending stuff to you to keep buying. We'll keep you full.
And you're going to sell some stuff for us too.
And we'll sell some stuff for you next year. Yeah, we're ready. Top of the list. Perfect. It's still a good market. Thank you for doing this. Thank you. Before I hang up though, I'm looking at your boxing in the background, and I know you're a boxing fan and your Purple Project for your buddy. Pancreatic cancer, but give me 90 seconds on that.
Yeah, let me tell you about how the whole boxing thing. It's a little bit of story. It's a good human interest story.
I
was having health problems, right? I was having indigestion, heartburn, hiatal hernia, the works, right? And I said, I got to get this together, right? And so I started doing cardio boxing classes, and I loved it. It changed my life. Rob Forcelli, who runs the studio, is my trainer. Unbelievable person, great friend, and knows fitness inside and out. And, over kind of a 3-year period, I lost almost 30 pounds. And as part of that, Rob runs amateur boxing events. So everyone gets to be, Rocky for the night, shall we say. So, I entered my first event. I never thought I was going to actually box. I was just going there to lose weight. So I entered my first boxing match in 2021, and it was a disaster. I was knocked down twice in the first round, and my opponent was killing me, and unfortunately he tore his bicep. So on technical default, I was the champion of that. But I was embarrassed. It wasn't a good showing, and I knew that wasn't the end of it. I had to make a comeback, right? So I entered another boxing event, which was the day before Thanksgiving of 23, right? And as part of that, I was training for the fight. I got home from vacation in August for the November fight, and I got a call from Michael Nenner, who runs Gurney's Resorts. He's president of Gurney's Resorts. And he said to me, like, Nolan, I don't know how to tell you this. George passed away. And I said, what do you mean George passed away? And this is George Philopoulos, the founder of Gurney's, really revitalized Montauk, bought the sanctuary in Scottsdale and converted that to a Gurney's. And I had previously been partners with George on Gurney's in Newport, which we successfully turned around and sold to Pebblebrook, if you remember. And, I was supposed to have lunch with George 2 months before he passed away. He canceled lunch, didn't tell me why he was canceling. Turns out he got pancreatic cancer, and it was quick like this. And, if you know George, and a lot of people in the hotel industry knew George because he was larger than life. He was like 6'7", gregarious, the kindest person you've ever met. And every time you'd see George, he'd lead with how's your family doing? How's Heather and the kids? Right. And I love the guy. And we would have done, many deals, in the future. And so as part of this boxing, I said to myself, wait a second, I got to do something here for George's memory. And so we raised money for Project Purple, which is for pancreatic cancer and early detection research, which was the chosen charity for the family. And we had a good amount of hotel people, that will listen to this podcast donated. So, I thank everybody. We raised $25,000 and then with matches, almost $40,000 for the night. And so, in honor of George's memory. So we had the boxing right before Thanksgiving. I got through the 3 rounds. I proved I could did it, and I was retired. But the one thing about boxing, Teague, is you don't retire, right? And so Rob decided to do another event in my hometown of Armonk. And it was local, and this was in May, just a couple months ago. And I said, I can't sit out an event in my hometown, right? And so I did it again, got through 3 rounds again. But I love boxing. It is a sport like hotel investing, where you need discipline, where you need grit, where you need tenacity, and you need to get off the canvas. I promised my family that I am done, that I'm retired from boxing. We'll see, right? Something's got to spur me. But I will tell you that I won't stop the training. It is part of my life. I was up at 5:30 this morning boxing. And so, I point this out for any viewers. It's never too late, right? And I started really my fitness at age 46. And hopefully it's added 10 years to my life. And so I don't golf. You can tell from this podcast, I don't have patience for golf, right? My wife played college tennis, so I can't play tennis at her level. And so, I'm the average Joe Rocky who shows up at the gym.
I love it. No, this is awesome. Remind me not to box you, by the way. And you got me by 20, 30 pounds. So yeah, hard pass. Okay. No, this is fantastic. And I mean that sincerely. Thank you for sharing. I love your passion. I love your energy. I love your knowledge of the space. Kudos to you and the family. Big hugs to Heather and the family, by the way.
Thank you. Then this was great. Thanks for having me. I think we're both passionate about the hotel industry. It's a great business. It's people and real estate. And that's why we love it.
And that's why we love it too. And that's why we do this silly podcast, so that we can meet more people like you and share your story with the rest of the industry. So cheers. Cheers to you, brother. I love it. I appreciate it more than you know.
Thanks for everything.
Thanks, Nolan.
Well,
cheers.